long term, I see the Bitcoin price higher, much higher. And that's because of the debasement of the currency, every single currency that's being measured against it. The only one that isn't debasing as rapidly as gold, but look, Bitcoin's a better version of gold. It's not even close. It's such a better version of gold. I know people like to wear gold and they like to, have it in jewelry, and there are definitely use cases for it, and there's utility for it, clearly, obviously. But there's different utility for Bitcoin, and I think that they're as a base layer, there are going to be a lot of things built on Bitcoin, second, third layer, and they're going to be important to the financial system.
If you think Bitcoin is just digital money for techies and libertarians, think again. In a powerful interview with Brandon Gentile, James Lavish makes a bold prediction that shakes the foundations of traditional finance. He's not just speculating. He's convinced Bitcoin is on track for a massive price surge in 2025, way beyond what legacy economists can even imagine. According to Lavish, Bitcoin's rise isn't just about hype, it's the result of a deeper, unstoppable force: the constant devaluation of fiat currencies. While every government-backed currency is quietly crumbling, Bitcoin stands tall. Even gold, the traditional safe haven, is starting to lose ground in both value and utility. Bitcoin, he argues, is already outperforming, and it's only just getting started. Lavish isn't mincing words. Bitcoin isn't just here to stay, it's the foundation of an entirely new financial system. He sees it as the backbone of a future where outdated institutions no longer dominate. And when this shift takes off in 2025, those who were paying attention early will be the ones riding the wave, while the rest scramble to catch up.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
First things first, Bitcoin does move off of liquidity. We know that. And like I said, it's because it's being treated like a risk asset. So as liquidity expands, Bitcoin follows. It lags by about 3 months, somewhere around 2 or 3 months. And so we saw liquidity drained at the end of last year. And so now it's coming back up, but Bitcoin's it's still lagging. It still hasn't, if you chart them against each other, it still hasn't reached that bottoming out on liquidity. When it, after it does, it will start to rise again. Maybe it has gotten pretty close here in the last couple days. But so that is important for there to be liquidity. But let's just face it, there's no long-term liquidity will go higher. The money supply will expand. That's just reality. There's just no way in our debt-based system that we could sustain this without having a debasement of the currency. That's just the truth. We will still see the expansion of money supply and Bitcoin price going up, alongside that. So that's just the reality. But looking at that liquidity and what we need for Bitcoin to kind of reverse course here, and all of those other catalysts that you talked about, and I've talked about, the tailwinds. Well, one of the biggest one, like you just mentioned, is the full repeal of SAB 121. So this is an accounting bulletin that the SEC put out, and it was kind of it was a very strict bulletin advising banks and financial companies on how to treat Bitcoin, and it basically warded them off from holding it as an asset at all, and basically said it would be treated as a liability. And so really difficult for them to do anything with it. And so they just avoided it. That's why you had so much choke point 2.0, because, banks and financial companies, institutions just didn't want to deal with it. That's all been changed. The SEC, so last year, the SAB 121 was repealed by Congress. It was passed to be repealed because it didn't make any sense. It was kind of like an end zone run by the SEC, where it was oversight by enforcement, and that was just, that's just This is wrong. And so the legislators were like, this is our job to come up with the laws and the rules. It's not your job as the SEC to just decide what you want to do and do an end zone run. So no, we're repealing it. And you got out of bounds, Gensler. And so it went to the president's desk. And as promised, he vetoed that. He vetoed it because this last administration, the Biden administration, was incredibly antagonistic to the crypto and Bitcoin ecosystem and community. They planted their flag and opposed them. And I don't know if it was because of the noise coming out of Elizabeth Warren's camp or her anti-crypto army or whatever it was, whether she's in the pocket of the big bankers that they didn't want Bitcoin because they know that it can be disruptive to their business. Whatever it was, they weren't ready for it. They went along with it, and he vetoed that repeal. We'll enter this year, and you have Trump, a new administration that is clearly very Bitcoin friendly and crypto friendly. And suddenly the SEC, they just strike the bulletin, abandon it, and now it's no longer in force. And so now the banks, this is the big deal, is the banks can actually hold Bitcoin as an asset and build products around it. They can build lending products. They can build collateralized products. They can do things that they couldn't do before. And it's a really big deal that if you have Bitcoin and you can work with your bank, whether it's JP Morgan or, or if it's Wells Fargo or Chase or Citibank or whatever it is, you can work with them to use your Bitcoin as collateral for things, or they can create collateralized products or lending products for you. It's going to be a big deal, really big deal. Because I know there are a lot of Bitcoiners out there who sit on a massive amount of Bitcoin that they don't want to sell, but they want to somehow monetize to use in their favor. They don't want to pay the taxes on it. They don't want to get rid of it, but they want to find a way to use it. And benefit from it. And that's going to be, I think that's going to be a huge deal. And eventually it'll trickle down into things like, mortgages and loans against them and using Bitcoin in just, residential mortgages for collateral. So you don't have to put up your 20%. You can put up 10% cash and 10% Bitcoin or something like that. And it's going to be, I think this is going to be a big deal for both consumers, but really a big deal for the banks. They're going to be rushing to get these products out later this year as they get their head around and get their teams around this. And so I think it's going to be a really big deal. And so what does that mean? Well, it just continues to march down that institutional adoption road, where you have institutions are embracing Bitcoin in particular, and they're going to be using it to build products and sell products to people.
James Lavish says Bitcoin's price is about to go wild, and it's all about liquidity. According to him, Bitcoin doesn't move randomly. It follows the global liquidity curve with a 2 to 3 month delay. Last year, liquidity was drying up, but now it's flowing back, and that means Bitcoin is about to make a serious move. The money supply is rising, and Bitcoin's price is primed to follow. Buckle up, we're looking at the setup for a major surge. But here's where it gets really interesting. SAB 121, the accounting rule that kept banks from holding Bitcoin, just got wiped out. That means banks can now treat Bitcoin like any other asset, no more restrictions. The floodgates are open, and this is huge. Banks can now start building Bitcoin-backed products, lending, collateralized assets, and more. It's the beginning of a whole new era for crypto in traditional finance. Bitcoin is no longer just a digital asset floating outside the system, it's becoming bankable. That changes everything. The financial world is about to experience a shift it didn't see coming. Want to hear more from Lavish? Head back to the interview and catch the rest of his eye-opening insight.
For the viewers who don't realize this, Tether is currently, I think, the 6th largest buyer of U.S. Treasuries in the world. So wow, it's crazy. So why would it be doing that? Well, it's doing that because it wants to peg itself to the US dollar. And so, and again, why would it do that? Because people around the world want access to dollars. And one of the ways they can get access to dollars is through stablecoins. They can get on these platforms and buy the stablecoin on that platform. Another reason for it is that when you're on those platforms, you're looking for a little bit of yield with your idle cash. And how do you do that? Well, you buy your stablecoin with it, and that's what you're looking for, to have the liquidity that is pegged to the dollar rather than whatever your currency is that you can be buying Bitcoin with or the other cryptocurrencies with. Really important for people to understand that dollar dominance is predicated on the U.S. retaining retaining the U.S. Treasury as a global reserve asset. So people need to be buying treasuries. How do they do that? Well, if they're buying stable coins that are pegged to the dollar, they're going to be buying T-bills and treasuries. And so they know this. So that strengthens the position of the treasury, that you continue to have these stable coins buying these treasuries, which stabilizes the dollar, because people aren't trying to get away from treasuries, which means that they don't need dollars. Well, the world needs dollars. And the easiest way to do that is to have treasuries, because you can turn the treasuries into dollars. Now you go to the BRICS. Long term, I see the Bitcoin price higher, much higher. And that's because of the debasement of the currency, every single currency that's being measured against it. The only one that isn't debasing as rapidly as gold, But look, Bitcoin's a better version of gold. It's not even close. It's such a better version of gold. I know people like to wear gold and they like to, have it in jewelry. And there are definitely use cases for it, and there's utility for it, clearly, obviously. But there's different utility for Bitcoin, and I think that they're as a base layer, there are going to be a lot of things built on Bitcoin in second, third layer, and they're going to be important to the financial system. And so that having a trustless system like this is it's revolutionary. It's going to change the financial world. And if you just keep it to first principles, this is a network that is backed by 75 terawatt hours of energy, which is the equivalent of 20 full-time nuclear reactors running full-time. It's completely decentralized. And it is a fortress of network, it's a digital fortress of network power. And it's nation state resistant. That's how big it is. And that's how strong it is. So you just keep the first principles. Don't worry about the price activity. It is going to be volatile. I expect the volatility. I actually welcome it. Why do I welcome it? Well, I'm an institutional professional investor. My hedge fund takes advantages of these drawdowns. We do things that enhance the returns, and we have drawdowns like this because we have the ability to do that. And you do too. If you just leave a little bit of extra powder and you're not always all in and you've got some powder, and you can take advantage of these drawdowns. And that's the volatility advantage of Bitcoin. So, and the fact that it's rising over the long period of time, that gives you these opportunities to take advantage of price swings. And I think it's a good thing. Am I nervous? Nope. Am I optimistic? Absolutely. Super optimistic about especially some of the opportunities we're seeing for the fund. Some of the private opportunities we're seeing for the fund that, other investors just don't get access to because we're involved in this space. And that's an advantage. And being involved in this space is a really big deal. And you got a lot of people on the outside that have no idea what's going on here. We're so early. I was talking to a colleague of mine who is in mainstream this morning. Intention is that everything's priced in. All the good news is priced in. That Bitcoin's at its peak. That's it. There's nowhere to go from here. I will not call his name, but I just think I appreciate the viewpoint. I just disagree. I think that there's massive amount of upside here, massive amount of runway and adoption ahead of us that we have barely seen any of, and I'm super excited about it. It's an open, free market. There's no entity that is determining the price. I mean, you can buy and sell right here. You could have bought and sold 50% lower than here, 80% lower than here. It's and it will continue to happen. coins will be redistributed. And it's because it's a completely decentralized system. It's decentralized. There's nobody in control of it.
James Lavish praised Bitcoin's decentralized and reliable structure, calling it a digital fortress powered by immense energy, equivalent to 20 nuclear reactors running non-stop. This robust backbone makes Bitcoin uniquely resistant to government interference, setting it apart from traditional assets. For investors seeking decentralized alternatives, Bitcoin stands out as a strong and secure option. Meanwhile, Bitcoin network economist Timothy Peterson is highly optimistic about what's ahead. He projects a 75% chance of Bitcoin hitting new all-time highs within the next 9 months. According to him, Bitcoin is currently sitting near the lower end of its historical range, the bottom 25%, which typically signals a strong potential for a rally. On the technical side, analyst Crazy Block highlights 2 key on-chain levels: the realized price for short-term whales at $91,000 and the cost basis of highly active wallets around $84,000, $85,000. These levels form critical liquidity zones. If prices dip below, it could spark selling pressure. Traders and investors should watch these areas closely for signs of trend reversals or bullish momentum. What do you think will be the biggest driver of Bitcoin's future growth? Drop your thoughts in the comments. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.